estate investor, there's a way that you can fast track your deductions and save thousands of dollars in taxes just by owning a property. I'm talking about through cost segregation. This is the tax strategy that many have been using for years in order to save on taxes, and today I'm going to break it all down for you. My name is Keisha Rondino. I am a real estate CPA and tax strategist. I teach you how to use a tax code in order to save on taxes, keep more of the money you make, and build wealth in your business and investments. So make sure you like this video and you subscribe. So let's talk about the basics of cost segregation. When you purchase a rental property, the IRS allows you to depreciate it over either 27.5 years for residential real estate or 39 years for a commercial property. And when we say depreciate, that means that you are slowly writing off your investment over time. And the length of time that you get to write it off is where that 27.5 or 39 years come into effect. But here's the thing, not every part of your property should be treated the same. Some parts, such as the flooring, the cabinets, the appliances, landscaping, and even light fixtures, they wear out faster than the entire building itself. That's where cost segregation comes into play. Cost segregation is a strategy where you hire a specialist, usually an engineering company, to break your property into different components. This accelerates the depreciation on the stuff that doesn't last 27.5 years or 39 years. So instead of waiting decades in order to deduct that cost, you get a huge tax deduction up front. So here is why cost segregation is a game changer for you. One, you get more cash flow now. Because of bonus depreciation, many of those faster depreciating assets can be written off at a bonus rate, especially if the property was purchased recently. It also reduces your taxable income. So if you are a high earner, it can take you out of that higher tax bracket and bring you down to a lower tax bracket. And it's a great wealth building tool because the more that you can reduce your taxes, the more you can reinvest, scale your business or your investments, and grow your real estate portfolio. So cost segregation may be a good idea for you if you own rental real estate, especially if it's worth over $250,000. If you purchased, renovated, or built a property in the last few years that you are now using as a rental, and especially if you are considered a real estate professional, that's when you get the best benefit of doing this cost segregation with the accelerated depreciation, and utilize the bonus depreciation as it fits your property. For different years of when your property may have been put into service, the bonus depreciation number has changed. Utilizing that bonus depreciation for your benefit as you are doing the cost segregation. And you always hear about being a real estate professional. Well, even if you're not a full-time real estate professional, you can still benefit, especially if you can qualify for material participation in your short-term rental or in your short-term rental business. So let's talk about how this might benefit you in the real world. I had a client that bought a short-term rental for $600,000. Normally, they would be able to depreciate that over 27.5 years, which gives them about a deduction of $21,000 in annual depreciation, which is really good. But after they did a cost segregation study, they were able to accelerate $150,000 worth of depreciation just in the first year. So that reduced their taxable income so much that their bill dropped by over $40,000. Now they're going to use that money in order to buy another rental property. So using the cost segregation along with the bonus depreciation has allowed them to invest in another rental property, bringing in additional cash flow throughout the year. Now I know all of this sounds too good to be true, but it is actually a good tax strategy to use. But there are some things that you do need to keep in mind if you do utilize cost segregation, especially with the bonus depreciation. So cost segregation is not a free type of activity. You're going to work with a qualified engineering company that specializes in doing cost segregation, and they can range anywhere from $1,500 to $15,000, just depending on the type of property that you have. Of course, doing a cost segregation study on a residential property is going to be less than a commercial property that's worth a whole lot of more money. So take that into consideration when you are thinking about doing a cost segregation study. The second thing is that there may be a recapture later. So that basically means, yes, you are taking depreciation as you are operating the property, but when you sell the property, there's something that's called the depreciation recapture. That basically means that you're going to recapture all the depreciation that has been taken in the past, meaning that will go back into the cost of the property. And so when you sell, that is certainly something to take into consideration, but don't let that deter you from doing it. If you do plan to sell after a couple years of doing the cost segregation, you may look at doing a 1031 exchange, or really weighing out the cost that it is to sell the property based on that depreciation recapture. And the third thing is that it must be done right. You have to make sure that you are utilizing a company that specializes in cost segregation. It's not a matter of you as an individual saying that, okay, this is what I have inside of my property, this is worth 5 years, this is worth 7 years, and taking it upon yourself to extract what those different costs are. It has to be done by a qualified firm, and they will be able to provide all the information needed in order to correctly do the cost segregation, and make sure you have all the documents needed to provide to the IRS if there's any questions about the cost segregation study that's done. So if you're ready to look into cost segregation, this is what you need to do. 1, talk to your CPA, a tax strategist, to make sure that it's right for you. It may not be the right move for you based on the type of property that you do have. The next thing you want to do is work with a qualified cost segregation firm. Talk to your CPA, talk to your tax strategist, because there may be a firm that they work with that they can refer you to make sure that you are getting exactly what you need when it comes to your cost segregation study. Another thing you want to do is look at your overall strategy for the property that you are considering doing a cost segregation on. Think about whether you want to sell it soon, whether you do want to hold it long term, because you do want it to make sense from a portfolio standpoint what happens with that property once you do the cost segregation study. The last thing is plan your strategy around it. When you do a cost segregation study, it's not just about saving on taxes. It's about using that savings to grow. It's about what you're going to utilize that money for. Are you going to invest in more properties? What are you going to utilize it for in order to get the best benefit of using that cost segregation? So if you are a real estate investor and you've never looked at cost segregation, then now may be the time for you to take a look at it, especially if it's going to bring you some additional tax savings. If you want to know how this can work for you, let's talk. Use the link in the bio in order to schedule a call with my team, and we would love to discuss it with you. We'll help you map out a custom tax strategy that includes cost segregation and other wealth building tools. Also, drop a comment if this helped you and let me know, have you ever done a cost segregation study, if you're thinking about it, or if this is even the first time that you are hearing about it. So I hope this video has been helpful for you. Thank you for watching. Make sure you like and subscribe, and I look forward to seeing you in the next video. Bye.